Hello and welcome to the Next 100 Days podcast. My name is Graham Arrowsmith.
And my name's Kevin Appleby. So today, Graham, we've got a very, very famous guest with us. We've got Chris Martin.
Yeah,
isn't it?
Yeah. Well, Chris, we obviously booked the wrong person because you're going to talk to us about business finance. And welcome to the Next 100 Days podcast.
Thank you for having me. And we can talk about my various music tours and stuff if you'd like, but we're more here about business finance. So
I honestly, I've heard the name, but I wouldn't be able to put the name to a band. Honestly, I'm really that ill-informed. Oh no, there are other subjects I'm probably more informed on, but music's not really one of them. But Chris, you are based in Northampton.
Yeah, just a small village just outside Northampton called Blisworth, so between Northampton and Milton Keynes.
Oh right, okay, that's cool. My youngest son used to live in Milton Keynes and now lives in Leamington, so it's in that area, and it's a lovely part of the world. But in Northampton, for those people who don't know, it's famous for cobblers, isn't it? Really?
Yeah, absolutely.
Yeah.
My uncle was signed there when they were Division 1. So my claim to fame is that my uncle was the youngest footballer ever to be signed to a Division 1 football team.
Wow! Oh, wow!
Well, I mean, famous for the Northampton football team, but actually people who make shoes.
Yes.
Which of course are cobblers. So anybody listening to this. Australia, I'm sure you'll know what a cobbler is. But the thing is, that's Northampton, and it's quite famous for that, but also famous for financial services. And in your case, business finance. Now, I don't really know much about business finance, but Kevin probably knows a bit more. But tell us, what is business finance?
So business finance is an umbrella term for numerous different solutions for businesses, if you like. And the reason that we're on the podcast is because a lot of people are very similar to you. They don't know a lot about business finance, and generally, when you don't know a lot about something, you sort of back away from it.
Yeah.
So, business finance, in summation, is a group of different finance products that can be used in many, many different ways in order to grow and expand businesses. That's our sort of primary target, is to deal with growing and expanded businesses and to fund them through that growth.
Do you fill that gap that banks are pretty rubbish at delivering?
Yeah, it's a pretty big gap at the moment because banks aren't doing very much when it comes to helping the SMEs, particularly sort of the S's in the SME scale. So we're very much sit in that space between bank funding and not really. So a lot of our panel of lenders are not high street banks. They are private investment banks. They're challenger banks. They're private investment companies, and in some cases high net worth individuals. So a very big vast pot of money that we have access to.
And being cynical, the conversation you probably have with a high street bank would be something like, "Oh, so Mr. Arrowsmith, you don't actually need a loan, do you? Therefore, you can have one."
No,
yes.
I don't. So no, yes, right, absolutely, yeah. They're always there when you don't need them.
You need the loan. Well, you've probably got zero chance of getting one.
Yeah. What is interesting is that it always seems to me that you've got some sort of busybody at the other end of the conversation who are ripping you apart, almost for fun, and with the no at the end of it anyway. So basically, I just wonder whether or not you have to be pretty cautious, because if you're picking up the slack with small enterprises, not all of them are going to come good, are they?
No, you're absolutely right. So our job is to, firstly, as a responsible broker, our main priority is to protect our lenders' money. And then the second priority is to get the funding that's required for businesses into those businesses.
Yeah.
And at the moment, there is obviously a higher level of fraud in the industry than there's ever been before. That's just because of the amount of sort of artificial government money out there at the moment. There's a lot more fraudsters trying to snap that up. So firstly, we have to weed out all of that. And I think that's where a lot of people are getting no's from the banks, because they just don't have the correct systems in place to weed that out. So what they're actually doing is taking a far more cautious approach and just saying no to pretty much everything. With us, we're actually very, very different. All of our lenders, their primary job is to lend money, and without lending money, they don't make money as a business. Whereas banks specifically, they have so many different arms to the businesses, whether that's mortgage, investment, savings, that if they don't actually lend money with loans, asset finance or whatever, they still survive, they still make profit. So that is very much the big difference, that the people that we speak to have to lend money in order to make money, in order to sustain business. So their approach to lending is very, very different.
Do people turn up at your door with the battle scars of having dealt with banks?
Yeah, daily. Daily. And the first thing I'll say to those people is just don't take it to heart, because I genuinely think if Bill Gates and Microsoft turned up to NatWest at the moment, they'd probably get told no. So my first thing to customers is, look, don't take that to heart. Now you're dealing with us. We will get this over the line. The important things to understand is the biggest thing in our industry is knowing what lender or what bank is actually going to fit your requirement. Right. There's a lot of lenders out there that, for example, they might not deal with the construction sector, or they might not deal with the beauty sector or the leisure sector or whatever. In that scenario, if you bank with them, you've wasted your time by approaching that bank for a loan, because you just don't ever fit with their criteria. And now a good broker will have access to such a vast array of funding that we do have the lenders that specialize in those sectors. And because of our expertise and the volume of business that we write as a brokerage, we are, we're the man on the ground that's got constant up-to-date information from each one of those lenders. So we effectively shortcut the process and save the customer a lot of time and money in the process.
So what sort of things could I come to you and ask for finance for?
Okay, great question. Basically, anything but property. We certainly can get involved in property, but what I'm not in the game of doing is wasting customers' time. There are better people in the market for property finance, and I would always, pass my customers off onto those better people. What we're very good at is sticking to what we know, and what we know is business loans and asset finance. There are two core products. So asset finance, I'll give you a couple of examples of ones we've just done. We've just had a small group of gyms approach us. They had 3 established gyms already open and trading. They wanted to open the 4th in February, which we've now funded and paid out. When that customer came to us, they wanted to fund the entire fit out of the building. And they also needed to bolster working capital in order to facilitate the first few months, which can be a bit tricky if member numbers don't quite get where you want. Absolutely. So with that requirement there, we split that into a couple of different products actually. So we did the customer a business loan using the government's current recovery loan scheme product. So that was an instant cash injection into the business to handle all of their working capital and cash flow needs. The second requirement, which was much larger, was just shy of £500,000 for the actual fit out. Now the fit out, a lot of people will think you can only finance the actual kit. So the fitness equipment, the lockers, the furniture, vending machines and things. Anybody can do that. That's very, very easy. So not only did we do that, but we then went on to fund the actual building works, the fit out. So your suspended ceiling, your air conditioning, your floor tiles. So from the customer's point of view, they've come to us with a requirement. We've given them 100% funding for all of the kit and the fit out. On top of that, we've then supplied them with a cash flow loan just to give them, just to ease the sleepless nights.
That's really helpful, Chris, telling us all about a gym, because Kevin and I haven't been in one for about 30 years.
Yeah, no, same here.
Yeah.
Same here.
But
this is very true. And I used to be trustee of a sports centre that ran a gym, but as far as actually being in one, certainly not this side of lockdown. No. Probably a little time before lockdown.
No, in fact, I've got to say, well, that's a really good example. So if you're looking at, you've got 2 parts to that though, but what kind of repayments and over what period would that business be more or less not the specifics, but broadly, what would they be paying you back or paying your clients?
As a general rule, you're looking at a 5-year term in our industry. Some customers do like to go a little bit less, but a 5-year term for things like gym equipment is about right. I think it's more dictated by the useful life of the asset, because what we don't want to do is put customers into a 5-year agreement on kit that only lasts 3 years. Then 3 years and they've got to replace it, because then you've got a 2-year period where you've got 2 finance agreements running side by side. So it's very much matching up the duration of the agreement with the realistic lifespan of the equipment.
Does gym equipment last 5 years?
Yeah, as a general rule, because a lot of it, particularly from the major manufacturers, what you'll find is the core product will last 5 years. If it's rowing machines and things like that, then you have to replace a few things as part of the service. You know, the seat becomes a bit worn, the handles, etc. But yeah, as a general rule, gym kit will last 5 years plus.
So 5 years, you talked probably both things together north of 500,000 quid. What kind of repayments would you be paying? Because that's like a big house, isn't it? So effectively, you've got a big house, maybe not in Northamptonshire, but basically, you know, a big house that you're repaying over 5 years. That's a fair whack, isn't it? How much would that be a month, roughly?
It is. I'll have to actually pull some figures out on that for you, but you'd be looking on that as a rough example. Every £100,000 you borrow over a 5-year term, you'd be paying back probably about £111,000.
Right. Okay. So that would be over the 5-year period. So that's 20,000 or so, 25,000 a year.
Yes.
So I'd split that by 50. Yeah, right. Okay. Yeah. I've got the broad idea. Well, I suppose that's not too bad for many people. And I think that would be, I mean, if you don't have the money, you can't do it, can you? So
no, and it goes back to what's the useful lifespan of the kit, because you know, it's great with that gym, for example. If we did their funding all over 20 years, then, you know, they'd be having more profit from day one.
Yeah.
But all of a sudden, in 5 years' time, we'll be having a conversation of, hang on a minute, I've got 15 years or whatever left to repay this kit, and it's now worthless, and effectively it's gone in the bin. So it is very much tying it in with the asset life.
Is it likely that the gym's going to be there in 5 years as well? Isn't that part of the risk that you and your lenders are taking?
Yeah, absolutely. So there's various different ways in which to look at a business. You've got what I always use is sort of a seesaw scale. So you've got, if you've got a very, very strong customer that's got a requirement for a very weak asset, then, you know, we're very, very good on that. You could have a very weak customer that's got a requirement for a very, very strong asset. But it's our job to convey all of that. But in between that, you've got the customers that are very, very strong and want finance for very, very strong equipment. With that, you know, it's a very straightforward process from our side. There's not really a lot of our skill we have to inject into that, because it's a no-brainer from a lender's point of view. But a lot of the business we write, you know, we have to put a lot of input into the proposal to correctly portray the business, the requirement, what this funding is going to do for the business, in order to get the underwriter comfortable with the customer.
I suppose some of that's down to how mature is the business. You can have a new business comes along, then they can have a very, very good business idea and actually be going for quite a strong asset. But because there's no track record of trading, there's nothing to take to the lender. Yeah, I can totally.
But we still do a lot of that. We do a lot about, last month, I think we did about 12% of our business was new start business. And in that scenario there, what we have to do is there's obviously less lenders in the market to offer finance to new businesses. And those lenders would look a little bit more closely at the individuals behind the business. So, you know, what's their experience in business? Do they have any business experience regardless of sector? What's their experience in the sector? What's the resale value of the equipment and our likely get out scenario if everything were to go wrong? That's a very important one for the lenders. And then what's the sort of the financial strength of the individual behind the business? We're not saying that people have to be multimillionaires or anything in order to lend, but it's scalable. And as a general rule, the more somebody is personally worth, the more likely it is their business will succeed.
Yeah. The interesting contrast between somebody who's starting up and a gym that's got 3 gyms and's going for a 4th. I mean, you've got the metrics for the number of years that have been in operation for the other 3, and that should give you a certain amount of comfort in terms of the 4th. You can look at the location, etc. Presumably, it doesn't have to be around Northampton, or wherever, but wherever they are, you get a rough idea of whether it's going to be successful or not. But I guess that the gym, just thinking about the gym, they would actually have to make, to pay that kind of money back, they'd have to make and their staff and goodness knows what, they'd have to make quite a big income from that gym. Is it many multiples of the fee that they're paying you back?
Yeah, the gym sector specifically, a lot of people look at it just based on the actual number of active members, but a gym is quite a unique business in that, ironically, all business plans written for gyms are based on X number of people having a membership and never walking through the door.
Yeah.
So I don't know the exact numbers, but I would imagine in a gym it's less than half of your members actively use your services.
Right.
So gyms are actually a very good one to lend to from a lender's point of view, because all of their income is in on a monthly basis. Their monthly payments are obviously on a monthly basis.
Sure.
And also, when it comes to new businesses, lenders will very much look at what their previous experience is with other businesses.
Yeah.
So they'll always look back at their own track record of other businesses they've lent to. And gyms historically has always been a very solid performer.
So what was it about finance that got you interested in all those years ago? Well, I mean, couldn't you have been a professional footballer or something, or a model or something like that? I mean,
luckily you can't see further down in the you'd understand why I can't be a pro footballer.
Yeah. No. But I mean, what was it about finance that dragged you in?
Well, to be honest, for my sins, I hold my hands up here. I used to be an estate agent.
Oh, goodness me.
I know, absolutely. And the 2008 recession hit, or started to hit. And I'll be brutally honest, I sort of fell into the finance industry through a couple of friends of mine. And I sort of found my way into it as a potential new career path. And literally the second I got into it, I was flabbergasted at the numbers that were talked about, because I didn't even know the asset finance industry existed until I got in it. It's a very small industry, but the output of the industry is phenomenal.
Yeah.
And I quickly sort of realized that we're almost, it's almost like a Dragon's Den set. And, I'm pitching it to the Dragons on the customer's behalf. And it just became very, very addictive from there. And all I wanted to do was better myself and better my ability to portray my customer's requirement to lenders. And when you start to see now, so far I'm 15 years into the industry now, and a lot of the customers I'm dealing with today, I dealt with on day one, and they just have very, very small requirements. Those customers now own groups of 15, 20, 30 pharmacies as an example, and they've come from absolutely nothing, and I funded that first one. So it was just about the rapport building, and the actual product does make such a difference to these people. A lot of our customers are, particularly back in 2008, because we dealt with a lot more new starts, a lot of these customers were literally making life-changing decisions coming out of employment into running their own businesses, and we were the glue that sort of made it all happen, really. So it became very addictive.
Would have done. I don't know about you, Kevin, but they have this wonderful sort of story from the creation, but also, like you said, that they're now running big businesses, and it's the 4th gym, it's the 15th pharmacy. I mean, it must make you feel that you're contributing really successfully to the economy.
Yeah, it does. It does actually, and there's been quite a lot of research done into our industry, and I forget the exact number, but I believe it's something like every pound that we that we facilitate in lending puts about £6.60 back into the economy. So it's humongous. So yeah, it's the fact that we are having a positive impact as well.
So do you think that that sort of metric will encourage the government to, come up with more schemes, whether it's business recovery or not, but basically more schemes to help enterprise? Particularly with a right-leaning government, you would expect them to want to support small businesses. Is that? I mean, I don't know quite what schemes are on the blocks at the moment, but is the government doing its part, do you think?
Since COVID, yes. I think our government funding packages and government support since COVID sort of struck has been absolutely phenomenal, and has saved and helped a lot of businesses grow. Prior to COVID, no, I don't think we did. We had a few schemes, the Enterprise Finance Guarantee Scheme and some other schemes, and the hoops in which needed to be jumped through in order to qualify for any of that was just mind-boggling, if I'm brutally honest. But we are very different as a country to a lot of countries around the world. That around the world, majority of countries, banks will actually take a shareholding in the businesses that they lend to. Whereas here in the UK, it's very much debt finance, and it's 60 monthly payments of X. And what that means is, in other countries, when businesses start to struggle, it's in the bank's interest to actually help them get back on track. And it's not quite the case in this country. And it is something that I do think needs to be addressed. And
do you like that model then? Do you think that, having a bowler-hatted golden pension chap on your board is exactly what we need in this business, in this world?
It depends on the requirement. If you've got a one-man band that's just started doing deliveries for Amazon and he wants finance on a van, then no, there's better products out there. Yeah. But when you've got some of the Unilevers and things like that we've got in the UK that have got phenomenal ideas, but there's a huge amount of actual liquidity required in order to facilitate those ideas, then absolutely, I do think there's an angle there for government to step in. Because at the moment, you've only got sort of the angel investor side of things. And I think in a lot of those cases, the percentages of equity that you have to relinquish, again, can strangle the business and are not really in the interest of the business.
And I know Kevin's very, very heavily into finance offices, but I'm thinking about the types of people that turn up at your door. Is it usually the chief execs? Is it usually the owners?
Yeah, as a general rule, now as we're the last year or so, we've really seen the caliber of our customers increase, and we're dealing with a lot of customers now that are turning over, 500, 600, 700 million pounds. And in that scenario, we're never going to speak to the owner. No. We're then, you're in the realms of the finance directors generally. But in terms of our core customer, absolutely, we're dealing with the business owner.
Yeah. And your business, if you like, the spread of businesses, you've got some big hitting companies that are, 500 million plus. Most of them will be small, though, I guess. Yeah. And is that how it is in terms of the bell? Well, not so much the bell curve, but the spread of customers.
Yeah, and I'm very keen to keep it that way, because my analogy to the sales guys in the office is, look, I'm sure Jeff Bezos financed one pallet truck or one forklift at some point in his life. You never know what this leads on to. And for us, it doesn't matter about the volume, the size of the transaction or anything like that. It's just doing the correct thing and getting the funding into that business. Because ultimately we don't do a massive amount of marketing. Majority of our marketing is actually done from word of mouth, and just building relationships with people. So if we help someone on that very small requirement there, chances are they're going to pass our details on.
I did notice on your Trustpilot, every single one was an excellent, So obviously you've threatened people with increased payments unless they give you a decent comment. But actually reading those comments, they do quite like you, Chris. I don't know what's wrong with them.
I know. I do ask myself that question in the mirror most nights. But no, genuinely, I do, hand on heart, think all of our customers have a great experience with you. Don't get me wrong, the odd problem crops up now and again that's unforeseen. But for me, that's an opportunity to strengthen our relationship with the customer, because when a problem crops up, it's all about how you deal with it. And inevitably, particularly through COVID and things, it was such a fast-paced world, things changing day to day, that, you know, you do drop the ball occasionally. But it's all about how you rectify it. And particularly when it comes to our Google reviews and Trustpilot reviews and things, we are very proud of those. You know, there's a lot of competitors out there and other businesses out there that have a ton more than us, but there's they're not as positive, and all of ours are from our genuine customers. We will have, what we're always about is we'll happily put you in touch with our customers so you can speak to our customers and see what the process was like. We're just a very open company, and I think the more open you are, the better people take you.
I noticed that Jacob, I think one of your people, was mentioned a few times, so I think you should give him a pay rise. Now that's on tape.
He does make me laugh when he rings the customers to say, look, if you're happy with everything, I'd really be grateful if you can leave a review. He thinks that if they sort of name drop him in there, it sort of creates a ton more business for him. But
it obviously does. So well done him. And all I would say is that, give him a good pat on the back.
Yeah. I will do, and I'll pass on your comments. But as a general rule, I think we are perceived to be very different. A lot of customers, when they speak to a finance broker, let's be honest about it. Most people's preconceived idea of a finance broker is that we fall into the same category as double glazing salesmen and traffic wardens of this world. But what we get a lot of satisfaction out of is actually changing the customer's perception of what a finance broker does. Hence the reviews we've had off the back of that.
So, Chris, we talked about asset finance. Suppose a company comes along to you they're very new, they've got maybe a product they're planning to launch, a piece of software they're developing, something like that. Would you get into the seed funding area to support something like that?
We do. We don't do huge amounts of it, because a lot of our lenders expect businesses to be sort of at full trading capacity, whereas a lot of the seed funding is obviously pre-revenue. When it comes to seed funding, there's not masses of options out there, and a lot of it comes down to directors actually securing it on their own assets. So as a business loan, as an example, but secured against some assets that they might have in the background.
Yeah. How do you say no to people?
We try not to, but we do get transactions that, they just don't fit lenders, whether it's because the customer's got some adverse credit personally, whether it's because the lenders have got a particularly bad debt ratio in that industry, or whatever it is. And from our side, it's all about educating the customer as to why they've been declined. I think that's the biggest thing, because almost all of our customers don't know a huge amount about finance. So when you just go to somebody and decline them, it's not particularly helpful. What we need to do is work with them and explain to them why they have been declined, and what we can do with them over the next few months to turn that around, whether it's to be dealing with any sort of personal credit issues they might have, or business credit issues, or whether it's just that the business isn't quite in a position where it can justify the repayment yet. So it's just about working with those people and making sure that we're front of mind at the point that they are going to be eligible for the funding. And that's very much our approach across the board. A lot of people we speak to on a daily basis aren't in the market for finance, and that's absolutely fine. The conversations we have with them are just hypothetical conversations to just explain a little bit about business finance so that they've got an understanding of it.
Yeah.
The different types that could be available to them and the amounts of funding that could be available to them. Because it's a big concern of mine how much knowledge a lot of business owners lack around business finance. And I think a lot of that is actually our fault as an industry, because I think we have been a very cold and unapproachable industry over the years.
It's more than that, Chris, because, you know, I could potentially use some money, somebody else's money, to do things on, you know, one of my businesses that I'm not doing.
Yeah.
And I'm thinking, but that, for me, that would be quite a burden in my own head, because I know that I'd have to go through heaven and hell to pay you back. I couldn't possibly not pay you back, because it's just part of my psyche. But I wonder how many it's almost like the fear that you might have to take that step. I mean, some people just might not have that fear because they're completely certain they're going to make the money back, etc. But is there something else at play?
Yeah, I do agree. I do agree, because you hear all these horror stories of people having their houses whipped off them when they don't pay and things, and it's very rarely the case, if I'm honest. And when people are concerned about taking on debt, it's then important to actually run through some scenarios, some sort of what-if scenarios. I like to speak to customers about worst-case scenarios, just so that they've got it all straight in their head and they're comfortable with the product. But if you've got somebody, we've got a chap come to us at the moment, and he's looking to buy 11 car transporters at £240,000 each, I think. So, you know, it's a £2.5 million deal, £2.6 million deal.
Yeah.
And he's having to sign personal guarantees on all of that. And to a lot of people, they'd just balk at that and they'd be like, no, I'm not signing a personal guarantee for that. But with him, we've said to him, look, let's run the worst case scenario. If this all goes wrong in 6 months, firstly, you contributed a deposit towards the vehicles to make the lender a bit more asset secure. Secondly, you've made 6 months worth of payments. Thirdly, you'll get an early settlement discount on the outstanding finance. And the most important part is those vehicles are worth a hell of a lot of money.
Yeah.
So the reality is, in that scenario there, obviously we wouldn't have exact figures until such event happened, and it won't, but the liability, his liability there is highly unlikely to ever be more than 5% of the outstanding balance.
Yeah, that's a good point. That's a really good point. So that actually makes you sleep a little bit better, and you're prepared to put your wife up as collateral in that case. I mean, I don't know.
How many times you put Dawn up as collateral?
Well, she's on the market everywhere, but she doesn't know it. But seriously, though, I do think it's quite important that that point was made, Chris. It's a really good point, because, to be honest with you, that's a hell of an investment from his point of view, and he's going to presumably make a lot of money from it.
Yeah, absolutely. Yeah, it is a valid point, and it depends on, you know, I always say to people, there's debt and there's debt. And what I mean by that is your mortgage is debt. Like we can't deny that it is debt, but it's a secured debt. If anything went wrong, there's an asset there to cover that off.
Yeah.
You can walk away a little bit battered and bruised, but it's not the end of the world.
Yeah.
Whereas if you had £50,000 on credit cards and you'd spent that on clothes and holidays and this, that, and the other, that's bad debt. You know, if anything were to go wrong there, you've got absolutely nothing to show for that, and probably no ability to repay it. So it's just weighing the two up.
This whole thing's made you a better business person as well, hasn't it?
100%.
You can tell that you just have a natural instinct for it. It must be great being that kind of pitch guy to the sort of dragons plural dens, because basically what you're actually doing is you're representing. Or do they actually stand almost metaphorically or actually alongside you when you're pitching their businesses?
No, so they'll stand behind us. So it's incredibly rare for us ever to put a customer in touch with a lender.
Right, I see.
Because the reason is that I am an absolute expert in getting a business accepted for finance.
Got you.
And yeah, you will find quite often that, particularly in the finance world, that less is more.
Yeah.
The more information you give, the larger the can of worms that you open, the slower the process, the less likely you are to be accepted. So, me as a broker, it's my job to give just the right amount, just the right amount of information, but that all of that information is crucial to the actual application. And I think that's where a lot of business owners fail, is that they try and cut out the broker and go direct. And I get the reasons why, but what business owners don't understand is that it's so easy to trip yourself up with lenders, and give information that's not what's been asked for. And then as soon as you confuse an underwriter, you've then put your own application on the back foot, because an underwriter's got some doubts about it, whereas it has to be portrayed in a very positive manner. If there are negative points, we should address those with the underwriters very, very quickly and explain what the negative point is, what the commentary is around that, and then quickly focus back on all of the very, very good stuff.
Chris, can I take you back to that example you gave us a while ago about the gym? Now, we talked about the gym getting asset finance for the fit out.
Yes.
That working capital finance came from the recovery loan scheme.
Yes.
So what can you do with the recovery loan scheme?
So the recovery loan scheme is, again, an umbrella for a few products. So under the recovery loan scheme at the moment, you've got business loans, which is the biggest one, just cash flow into the business. You've got asset finance can be used in conjunction with the RLS to give the lender a bit more reassurance. Invoice finance is covered by RLS, and then also some of the commercial property lenders are also involved in RLS. But I would say, certainly as a business, 90% of what we call RLS is just business loan money pumped into the business. And it's pumped in order for the director to use that money as they see fit in order to best grow and develop their business.
Right at the beginning of the pandemic, we had the bounce back loan scheme, where it was pretty easy to get some funding.
That's that's being polite about it. Was ridiculously easy and was borderline wrong. Yeah.
So I guess with the recovery loan scheme, there's a lot more to it than that.
There is, but not as much as you probably think. So the recovery loan scheme, for anyone that doesn't know, is a continuation of the previous schemes, which were, when COVID first came out, you had the bounce back loan scheme and you had CBILS, which is the coronavirus business interruption loan scheme. Ultimately the same product. The bounce back loan was £50,000 or less, and CBILS was £50,001 or above. So they're both exactly the same product. They just have slightly different terminology. The bounce back loans were, if I remember right, the bounce back loans were 100% guaranteed by the government. So if you were a bank and you had a 100% guarantee, of course you're going to lend that money. You don't really care too much about the customer and where it's going. CBILS had a 80% guarantee from the government. So, that means that the banks or the lender has to take that 20% risk. And that's where a bit more underwriting comes in, that if they're taking on any percentage of risk, they actually have to properly analyze the transaction. Now, fast forward to recovery loan scheme. That went live on the 1st of April 21 from memory. And that is a continuation of the CBILS scheme. The only difference is the government doesn't pay the first 12 months of interest. That's the main difference from a customer's point of view. We're now in iteration 2 of the recovery loan scheme. So the government's guarantee is reduced from 80% to 70%, which I think is good again, because it just puts a little bit more risk on the lender and makes them actually question their decisions and ensure that this money is going to the right businesses. But certainly a lot of the lenders we deal with on the recovery loan scheme, they have some pretty hard and fast rules. You have to have been profitable on the 31st of December 2019. So the first question is, was the business viable prior to COVID?
Yeah.
If the business was loss-making, I don't agree with this, but it was classed as a non-viable business. Mm-hmm. If it was profitable, then it's eligible. And the biggest or the most crucial point on the RLS is that you are eligible for up to 25% of your last year's turnover. And then it's just our job, with all of our experience of processing RLS applications, we understand obviously exactly what information the lender does and doesn't need. And the more transactions we do on RLS, the more we streamline the process, the quicker it happens. To give you an idea on RLS, we have one customer came to us, I think it was last Monday. Common story, they've been let down by their bank, but we spoke to them on the Monday, requested some accounts and bank statements. They sent those over on Tuesday morning. By Wednesday morning, the loan was approved, and by about 2 o'clock on Wednesday afternoon, the customer had £250,000 in their bank.
Wow.
Wow, that is sharpish movement. So what you're telling us, Chris, I think, is that there are a lot of options out there if you're looking to fund something.
And there's a lot of options even if you're not looking to fund something.
Yeah.
What do you mean by that then?
Well, so a lot of our customers, particularly through CBILS and RLS actually, a lot of those customers are traditionally customers that wouldn't take on debt in the business. However, because there's no personal guarantees, there's a government guarantee there. The early settlement terms are phenomenal on RLS and CBILS. All of these customers were sat there thinking, hang on a minute, I'm just going to take this, pop it to one side. If a use comes up for it, fantastic. If it doesn't, I'll just pay it back. Yeah. So a lot of the customers that we have actually done trade with over the last 2 years historically just wouldn't take finance. And they've seen the benefit. Once you educate them as to, I understand that you wouldn't normally have it, but you can have this here. It only costs you X amount per month in interest. And, you can take advantage of competitors that might be going out of business or bulk purchasing stock. And I remember one great example. One customer said to me, and is a good friend of mine actually, and I've done lots of vehicle finance and things for him before, and I just mentioned CBILS to him, and he's like, I've got no need for. He's like, I'm sort of doing all right as I am. I haven't really got any need for that. And he supplies roofing materials. And I said to him, I was like, right, so how much on average do you purchase? I said, how many months worth of stock do you purchase of roof tiles as an example in one go? And he said, we tend to order probably every 2 to 3 weeks. I was like, okay, fine. And I was like, have you got any sort of common stock products? And he's like, yeah, these tiles or those tiles. I said, okay. I said, you know that you're going to sell X amount of those in the next year. Do you agree? And he said, yeah, absolutely. I said, right, ring that supplier up and say, instead of ordering X amount, I want to order 30 times more. What discount can you give me? He did that, and he bought £250,000 worth of roof tiles. Would have been £310,000, but because he was buying in such quantity, he got it for £250,000. Wow. And he hasn't had to pay any interest on that loan for 12 months.
Great.
No brainer in many ways.
Exactly, but that is another example of somebody that didn't think they needed finance. And the reason they didn't think they needed finance because they just didn't understand what it can be used for.
You're like a little genie, and I think there's I would encourage people. That last story has to resonate with so many people.
Yeah.
And yes, it's about maths and what you're going to pay and all the rest of that, but I think it's a super story to at least have a conversation, probably not just with Jacob. It might be best if I speak to you as well. But at the end of the day, they might just find that their business can grow because of your intervention. I've got to say, I didn't quite know how today was going to go, Chris, because it sounds a bit like more Kevin.
You thought I was a traffic warden, didn't you?
Well, kind of. I'm not going to deny that. But the truth of it is, you've come across extraordinarily knowledgeable, and you've been a great guest on the Next 100 Days podcast. Thank you.
Well, I think that's a great look into business finance. I must admit, in the world that I deal with, we're normally talking about seed funding, we're talking about venture capital rounds, we're talking about PE houses and so on, but that's not the sort of funding the average business looks at. This is looking at, you've got a great business going along there. You need a little bit of money to help you to buy that new asset, to buy whatever it might be, to expand a little bit. Well, we've had a great insight today, I think, in how to go about getting sensible levels of funding, probably reasonably quickly, and from the best lender to suit your needs. And I think that's the thing, going to a broker such as Chris. He's got a range of different people who could supply the funds, and there is definitely something about matching your business to the right lender.
And I was really impressed with his supreme knowledge of this business finance area. And, if you're looking for finance and the banks have given you their traditional no, then, and actually probably your first step shouldn't really be the banks. It should be with people like Chris Martin at Origin Finance. So I think that's what you should be doing next, is picking up the phone and having that conversation with them, because it might well give you that sort of sense of certainty that, hey, we can help you. And I think some of the examples he gave were really helpful. And today's been a great podcast, Kevin. I've learned an awful lot myself. Yeah.
And this can be, I remember a situation myself with daughter and her coffee shop business. Now, the coffee maker broke down to the point that it was irreparable. Having nursed it along for a long period of time, and suddenly, Dad, I'm going to have to find £5,000 to buy a new coffee machine.
Wow.
Now, I don't have £5,000 lying about in the business.
No.
How do we do this? And this is the point at which somebody like Chris steps in.
Yeah.
£5,000, you're going to recover that over the next 5 years' life of that machine, over the next 50,000 cups of coffee it makes.
Absolutely so. And at the end of the day, I mean, if you can then, and if you choose to, you can pay it off early, then so much better, right. So much the better. So look, a great podcast, lovely chat. And so if you want to find out more, there'll be more links to his business in the show notes, but it's originfinance.co.uk. I'm going to check myself. It's originfinance.co.uk. So, today I've been Graham Arrowsmith.
I've been Kevin Appleby. Goodbye.
Goodbye.